And good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, April 26th, 2022. The market marched right on today, gave us some fairly clear, definitive answers to how and what we thought would be going on as these titans of tech put out their earnings reports. And today we had two gigantic titans, one being Google and the other being Microsoft. Microsoft got closer to being okay. And so the stock is basically just trading a little bit down. It's been down 5 or maybe a little bit more, been higher. So it's basically unchanged. Google, on the other hand, the stock closed at 23.73, is currently trading at 22.18, 22.19 or 22.20. So basically down 150 points. So the market made clear today that the pattern in or on the pattern that the second waves, as we go down degrees, the second waves where we expect them to come in at 50, doing a 50 to 62% retracement of that first wave, coming in way under. They're not even making absolute minimum, which is 382. Same thing happened again. And last night I did give all the indications that we had to consider and keep in mind of a continued rally reaching 14,256. As I said last night, that's not my expectation, but we have to put it out there. Now, what the market is basically telling us is that the power of the sell side, number one, the power of reality, number two, the power of how Elliott unfolds. So I've been discussing the different scenarios that would produce this, but last week I discussed, last Thursday, and again on Sunday, the fact that we're moving into this, which for I believe for the NASDAQ is like the largest group clustered together of market movers. And lately, you know, even during the pandemic and leading up to the beginning of this year, these, you know, Amazon, Apple, Facebook, Google, Microsoft, NVIDIA, Netflix, etc., have been blowing the doors off and boom, producing these 100-point, 200-point rallies in the NASDAQ, but also in these individual stocks. So getting it in the reverse, where the Elliott, which did show we're getting ready to drop into the stronger area or the stronger period within a larger third wave of where we get acceleration, of where we get a lot of price damage done, and we move. Now, and I was trying to put that together with all of these earnings that we've got coming out. And how's this all going to mesh and how's it all going to meld together? We're seeing. We're now getting it. Google didn't necessarily truly disappoint. But I think the street was looking for like 68 billion and they actually did 67.5 billion. I'm like, what's $500 million amongst friends? I don't know. In any case, what the reality is, it's like, no. And I think combined with other factors, with they're now really, you know, Duetsche Bank came out today and actually said that the US will go into a recession. They're looking for a recession, mild, they're calling it mild, but recession nonetheless. We haven't heard that word. We've not really been dealing with anything in that nature since the start of the pandemic because we didn't know, so could it throw us into, and I believe they said recession. Here we are, you know, 2 years later, and we're now confronting it square in the nose. But no big deal. I have to be honest with you. It's not the recession I'm afraid of, but where the adjustments need to be made is how much fluff did you put into these companies that it would just be never ending? So that Apple couldn't possibly not make as much money as they make. They're so rock solid. It's like, guess what? They will continue to be rock solid. What isn't rock solid anymore is the people spending $1,300 for a phone, a smartphone, for a computer in your hand. That'll change because how money shifts, how money moves, how money is lent out, what you get, what you have to pay. That's what's changing. That changes everything. People will start to pull it in until we have more facts, until I understand. Am I going to let go of this money now, or am I just going to kind of keep it and see what's going on because I may need it? A lot of good stuff going on. And to not put the whole picture together is to do yourself a disfavor. Because yes, companies will continue to do well, but in the current economic climate, we all have to go through this. It's not just us as consumers or anything else. It's all of it. It's corporate, it's consumer, it's governmental. Everybody's going to go through the same thing. Other people will feel it much harder than one group versus another group. But this is the way it is. Now, what did the markets do today? Surprisingly, they went down substantially more once that bell rang. And that tells you, though, usually what shows up in that after hour is we're getting buyers or sellers, but the funds, the hedge funds, that's when they come in and they're doing their end of day business. There are a lot of redemptions and new money. We have seen also days where the market closes and it goes up another 100 via the futures based on an earnings report or just based on how the money is coming into the market. Well, now it's exiting. And that is to be expected. That is what Elliott saw. Didn't know why, didn't know what would create it or what would, actually produce it. So here we are. Now I'm going to drop it down. So again, big picture, I put the minute 2 in place, and we are now dropping in minute 3, which was all of today, because once again, we end up at the high. And I'd have to kind of go back down to see exactly when that high was made, probably overnight. Yeah, 8 o'clock my time, 8 o'clock San Francisco, so Pacific time last night. We hit the session highs in Globex, and it was straight down after that. We had a nice little blurb right there. That was good. Had to come in, they had to have it. And that's after reaching a low below 13,100 and starting to break below that. And we had support underneath, which we did finally break. I think it was at 13,067, 57, somewhere in there. We did break it and kept it going. Then we broke 13,000. And then we kind of floated around in the 12,900s. Then we broke that. So lickety split after the bell, they were moving out. These are the funds. These are 401ks. These are a lot of switching of money. And so that tells us volumes as well. Now, whether people, again, point of recognition, if you remember, I talk about it often. That's what we're going through. So at that point of recognition, you're going to get a lot of redemptions. People, I'll take control of my money back. Thank you. I'll decide where I'm going to put it. Thank you. But we're taking it out of stocks. We're taking it out of equities. Where they put it, I don't know. There's a lot of discussion about it. I'm not even going to join that party just yet. So we are seeing 2 days running where the 30-year bond has picked up over a point. So that's a big recovery in the bonds, not stopping the stock market from going down. So here we are in the midst of the third of the, so we're in the minute third of the minor third of the intermediate third. We're in 3 of 3 of 3. And yep, it should be exactly like it's showing up. This is exactly what we look for. This was just the beginning. That was the warm up. Here we are in the middle. And so I am going to suspect once again that we can, I am expecting additional decline tomorrow. Once again, I'm going to lay it out as clean as I can. I'm expecting additional decline, but there is nowhere that says this cannot happen. This is just a pullback. And then kind of a kickoff for the next leg. So they're going to happen. This one happened to be at an opportune moment, and they just all walked in at the same time and bought it. They bought it up. And those are out there. Hourly chart, RSI, again, pretty weak, kind of showing overcooked. Money flow, exit, exit, exit. So yeah, I would anticipate at some point that we're going to rally. But here's the kicker, because it happened again. When this wave 2 did not get up into the Fibonacci resistance areas that are more common for a second wave, it did let us know ahead of time weakness in the market, because they weren't willing to come in and buy it. They did yesterday, and it was a good up day. And as I said, doesn't change a thing. Boom, we just fall off and we drop into the third. So if we keep it technical, second wave, it did what we thought, and it counts out as an ABC. And it did actually hold that 50, as I was talking about last night. And we did actually get a little bit more, but it failed miserably because I was looking for it to go to 13,602 or 3, I believe. And it was 20 points away and topped. Weakness in the market. So we're dropping in the 3 of 3. Let's start putting on some Fibonacci so we can start to determine where can that 3 of 3 put in a low. First one is we're going to put the extensions for that minute third. Then I'm going to layer it over it with the minor 3. So we're going to start to see where we start to get a little bit of overlap. All right, so on the minute 3, we've already reached 0.75. Pretty good. We did break below 12,942, which was major break. Keep your eye on the S&P. 4,100 is going to be, they thought 4,200 was going to be strong. It kind of held, but when it was time, it did not hold. The floodgate opened and out it went. So 4,100 is where a lot of people are drawing that line in the sand. Below that, get out of the pool. And so we may see another round of acceleration in about 40 points in the S&P. Now, in the NASDAQ, next up is 12,707, 708. You got that little zone right there. But in reality, I think this third wave has another large decline, like 300 point-ish. Like today was 720. Okay. Tomorrow, 300. Okay, so in 2 days, we dropped 1,000 points. Okay, that works. I'd like to see this minute 3 come down to this 100% of minute 1. That's what I'm going to look for, but don't know if I'll get it. In any case, I think 12,707, we may get a bounce first, we might drop down to here, get the bounce, and it could happen overnight in Globex, get another bounce. But I think this is kind of where we end up before we get a minute fourth wave bounce. Okay, so on the way back up, we're looking at, let me go back out to my daily, come back down to my hourly. Here we have the minor 1, minor 2. So we still will have within this, here we have 1, okay, yeah, 2, and then the third And so this actually does. And so getting down there is more important because it needs to at least equal it. So there's that layer. And then we got the 1, the 2, the 3, and then we get a 4 and a 5. And that just completes this minor third. So let's look to now where this minor third can end up. And same process. I go over here, put that up. I go to the bottom of wave 1. I go up to the top. No, you're a little bit higher. No, come on, 98. Yep. All right, I'll put it there for right now. So let's take a peek at where we get overlap. We get a whole bunch of overlap right in here, where minor 3, yeah, it would be minor 3, and 100% for the minute 3 is down here, 12,468. So I'm not sure why that is matching up. Interesting. All right. In any case, I think that minor 3 really still is on track to get down to 11,764. And so we got to get the 3, the 4, and then a minor 5, and that puts in the minor third. Okay, so first we got to finish the minute 3, then we get a 4, minute 4, and a minute 5. That then completes the minor 3, then we get a minor 4 and a minor 5, and then that completes the intermediate 3. Now I'm going to go up one more. Actually, I got to go out to the weekly, I think, or can I do it on the daily? Yep, I can. Now I'm going to put in the intermediate third. And we're just doing the same thing. It's the same layering. And we take it up to that. A little bit more, a little bit more. Come on. All right. It's going to be about 5 short, but I want to move on with our discussion. Back to that hourly. So there we have it. Here's intermediate third. Intermediate third, we're looking to come down and finish up at 9,075-ish. So we have 11,000, then we have 9,075. And that is for the minor third. And then we have 4 and a 5. And that 5 is going to be pretty big. It could be another 2,000 points, depending on where 3 ends. So we do have, this is ultimately where I think we'll finish intermediate wave 3, then we get an intermediate 4th wave and an intermediate 5th wave. And then we're looking at what I have been discussing, and that's a move out to here. Then we're all done with this initial leg down on a primary degree. You got to follow what I talked about yesterday. So we're just now finishing up an intermediate, either 5 waves down or an ABC. We'll get there. And that's just going to finish the first leg of the primary degree. And so on and so forth. So we still have quite a bit to go before we get all the way down there. All right. So for tomorrow, I do think we're going to continue lower. Pullbacks notwithstanding. We have to keep really, truly our wits about us so that we're focused on the task at hand. So looking for 12,468 and then a bounce in a 4th wave. And then that 5th wave, I think will bring us down into here. And then a 4th wave, and then another 5th wave, moving us down below all that to that 9,000 level. We got a lot more to go. Tomorrow, we also have Facebook and PayPal report tomorrow. Facebook, you'll take a notice, kind of interesting. Facebook closed at 180. Let's see how Google responded. I would just take $6 off that right away. Boom. In the after hour. It's extremely interesting. And now they're reacting off in Microsoft, they're reacting off of the conference call. And so that's likely still, that's, guidance moving forward, et cetera, et cetera. So it's been bounced around a little bit. Now it's up $3. So I don't know what the results were for Microsoft, but I'm going to say it's muted, whether they're really good, sort of good, okay, whatever the situation is, they would seem muted. Okay, now I'm going to leave it right there. Trading tomorrow. Keep your wits about you. Look for the trend to be cleared. Now, again, this is, coming in. Yesterday was not such a bad day. We kind of, we were down. Now we're down even more. So look for those bounces. And our next update will be on Wednesday, the 27th.